All right, what's up, everybody? Give you a moment to join. Going to do a little webinar this afternoon here on shorting bear flag patterns. You will see, especially, again, with the markets and all the volatility, markets go up, they go down, they trade sideways. So it's good to know and to be able to know how to trade diverse patterns, not just one directional bias. So, bear flags are a very popular pattern. That's the inverse of a bull flag. So I'll show you a couple bull flag patterns, and then I'll show you some bear flags. But just like with anything, guys, there's a lot of different patterns in the stock market. So, there's a lot to learn. So don't just trade something just because you see a bull flag or a bear flag. You have to know the other patterns, support and resistance. That's the stuff we teach you in our community. Again, we have our courses. We have a bunch of free courses here to help you get started. So make sure you know the basics. So when you're looking at this video, just because you see a bear flag in a certain time frame doesn't mean you should trade it. You have to be able to locate other things like support, resistance, other patterns, trend lines, all that good stuff. So you can take our courses right over here on our website at bullishbears.com to learn more of the basics on all the different patterns. So just to show you some bull flags first, and then I'll go into bear flag. A bull flag is when, moving average lines, technical indicators, they're not foolproof. They act as a guide. I like to have the moving average lines on my chart, so I just see them as a guide. But again, they're not completely foolproof, so don't use them as an indicator. They just are a helpful guide, especially with your new, when price is above moving average lines, that is a bullish or potentially bullish sign, obviously knowing trend lines and all that good stuff. But when price starts falling below the moving average lines, that's when things become bearish. So again, kind of that saying, the trend is your friend. In uptrends, many people will look for bull flags. And then when downtrends and price is failing those moving average lines and you see them crossing downwards, that's when you look for things like bear flags. So just to show you some bull flags, again, not all patterns are perfect, right? You got to use them as a guide. But again, not everything is perfect. So a bull flag is when you start to see price starting to move up. So it breaks, bulls push price up and you see these green candlesticks. That's kind of like a flag pull up. And then you get those consolidation back to the moving average lines. Think of this, the move up as the flag pull and then the consolidation back as your flag. So you can see kind of like a flag pull, and then kind of this consolidation back to the moving average lines. And these small candlesticks, you'll see this is what I like to see. I like to see those little hammers, inverted hammers, dojis off of that 9 EMA. And then many times if price is in an uptrend, I'll get in on the breakout of that bull flag. And then I could use a ride the 9 strategy. So you can see that blue line is the 9 EMA. If I get a good entry right off of here, off that 9 EMA, I could use kind of like a, half a body candlestick close below the 9 EMA as my target to get out. So when you start to see right here, price all the way over here, you see a candlestick close below that blue line, you see more than a half a candlestick, then I would get out potentially, right? I'd look at other patterns, but you could ride that 9 EMA all the way over here. This is a daily chart. And then take your profits, right? So that's a bull flag. Price goes up, comes back. You can start to see, you like to see ideally price get as nearer to those moving average lines as possible. When it starts to, a lot more people start to look at it, sometimes you'll see these candlesticks, they get a little bit further away from moving average lines. Doesn't mean not to trade them, it's just a little bit riskier because it's not nearer or bouncing off support. But then there's other things like those dots right here. That's the 5 SMA. Sometimes it doesn't pull back. It might only pull back to the 5 SMA, right? But you can see kind of another flag or a pennant pattern, right? Price moves up, consolidates back. You can get in at the break out of that, bull flag. And then if you wanted to wait for close below the 9 EMA to take your profits, you can do that. Or again, when price is way away from those moving average lines, sometimes it's good to take profits. You see those doji candles, look for reversals. So that's, other times that you could potentially take profits as well. Again, lots of other factors, previous support resistance levels, all of that good stuff. What's up, Roku? How you doing? So if you're watching this video and you're not watching this live, you'll probably hear me saying what's up and hello to other people. I'm just kind of doing a YouTube live. So I'll probably be talking to others while making this video. So again, some bull flags, what to look for there. Let me show you a couple more bull flags just to give you an idea. Again, they're not all perfect, right? So you can see stuff like, price going, up like this and then consolidating back down. So many times you'll see it kind of a flag up coming back and then, small little hammer reversals off of a 20 EMA or a major moving average line. Price breaks out. And then you can, if you got in off of a bounce off of this one, right off that 20 EMA, that red line, then you could, again, use a close below the 9 EMA as your stop. I'm not showing to short yet. I'm definitely not showing. I'm just giving you guys an example of bull flags first, and then I'm going to start showing bear flags, right? So just think of a flag kind of up, pulling back. So price goes up. I want to show you ones that are not perfect looking too, because it's, not all patterns are going to be super perfect looking, right? So again, if you get a good entry, a small little candle off moving average lines, you can use that ride the 9 strategy as a good trading strategy. So I'm just showing you guys a strategy. You'll see these lines. The 9 EMA is the blue line. The green line is the 13 EMA, and the red line is the 20 EMA. If you're using the 9 and the 20, you don't really need the 13. If you're using the 13, you don't necessarily need the 9 or the 20, right? So you could do the same strategy as ride the 13 if you'd prefer. I'm just showing you guys the different ones. I have them on my chart to show you guys an idea or a visual. But again, these are bull flags, right? So now when we go into bear flags, you're just going to picture the inverse. Instead of a price going up and above the moving average lines, you're going to look for price failing the moving average lines, right? And you can use that same ride the 9 strategy. You could ride the 9 downwards and do the inverse. So let me show you some examples of that. We'll take a look at Apple. If you go back to Apple let me actually remove these lines right over here. Roku, what are you saying? What's 1, 2, 3 top? I'm not sure what you're asking there, bud. Okay. So now this is a really good looking, clean bear flag, right? Again, they're not always going to be perfect. You'll see these moving average lines crossing and sloping downwards. And you can see these red candlesticks starting to fail. So now this is your flagpole down, right? Price is below the moving average lines, flagpole down, and then you get the consolidation back to the moving average lines. That blue line again is the 9 EMA, right? So now before I go and show you about shorting, let's talk about shorting, right? So I'm showing you TD Ameritrade now. They're not a great broker for shorting. Interactive Brokers is a really good broker. Centerpoint, Speed Trader are really good as well. Interactive Brokers is more of like the most economical broker. Speed Trader and Centerpoint, when you have bigger accounts, they're really good brokers for shorting. So basically, when you're shorting, you're doing the inverse of buying or going long, right? So you're going short instead of going long. When you're going long, just for the sake of purposes of this video, you might be buying at the ask to get in and then selling at the bid to get out. Obviously, there's other strategies, there's limit orders, all of that. But just kind of for the sake of purpose for the video, let's say you're buying the ask to get in and then you're selling the bid to get out, right? That's just a quick strategy to get in, get out. Now, when you're doing shorting, it's not as complicated as many new traders think. You're just doing the inverse. So you would sell the bid and then buy the ask. So With going long, going back over to, let's say, Apple, right? You would, let's go back to where it was, if you're buying and going long off these moving average lines, you might buy the ask or buy a limit order to get in. And then when you decide to take profits and get out of the stock, you might sell the bid and get out, right? So you buy low and then sell high at resistance level. And then you keep the difference, right? So if you bought price at 270 and then you sold it at 300, you made $30. Now, shorting is just the inverse of going long. You would sell high and then buy low to cover. Yeah, Speed Trader definitely still exists. So you would sell, just say you sold at 300. I'm not saying to do that right now. You can see this is where you start to look to short if you're doing a reversal. This is a different strategy. Reversals when price is overextended. This is going to be a video on bear flags, but this is where you might start to look and say, okay, I might go short. I'm using stocks like Apple and Netflix and Facebook as an example. This you can go short with obviously small cap stocks. I'm just kind of showing you the patterns. Hey guys, the whole thing with we did courses on our website. If you want to know how I set up TD Ameritrade and stuff like that, we have a couple courses here on Thinkorswim and Interactive Brokers. I don't want to get sidetracked on this right now. This will teach you how to kind of set up Thinkorswim or Interactive Brokers. I get distracted easily, so if I start answering all those questions, I'll never get to bear flags. So what you want to do is you would sell high or sell at resistance levels. So you would sell, let's say, the bid, and then you would buy the ask, or buy at support levels and keep the difference. So sell high, buy low, keep the difference. So going over to bear flags, you'll see, here's one on the daily, really perfect looking bear flag, right? Red candlesticks down, consolidation back to the moving average lines. You can see that 9 EMA. And when price, this is a daily candle, when price starts to fail, this candlestick right here, that's when you would take a short position, right? You could use a candle close above this as your stop. So if it fails and goes against you, you can use a candle close above there as your stop, or whatever your risk management is. I like really tight risk management strategy. So if this fails and there was a close above this candle as I would get out. But as you can see here, price starts to fail. Now, what you can do, kind of using that ride the 9 strategy, is when price goes back to that 9 EMA and you get more than a pretty decent candlestick close above that 9 EMA, consider taking your profits, right? I'm just showing you one strategy, right? I'm not showing you anything else other than just riding that 9 downwards, right? It fails, you get a candle close above here, then you can get out. Obviously, there's lots of other profits down here that you could be taking, right? Lots of other candlesticks. It's important to know candlesticks. But this is I just want to keep it simple for you. If you want to, instead of ride the 9 up, ride the 9 down, right? Or ride the 13 if that's what you prefer instead. So price fails, it goes back to that 9 EMA. You can see right here, this is where you'd get out. So if you shorted below this candle, and then you'd cover down here, right? So that's with Apple. I'm going to show you a few on daily charts, and then I'm going to show you mostly on 5-minute chart setups. So this is a way to kind of scalp intraday and kind of slow down shorting for you, and give you time to be able to short with 5-minute patterns. But this, what I'm showing you guys, you can use on any time frame. This is a daily. You could use this on an hourly, a weekly, a monthly, a 5-minute, or a 1-minute. If you want to short intraday and just scalp really quick, you can do the same thing. Picture this chart as a 1-minute, right? And then you could do the same exact thing. Whatever time frame you're using, you could stick with that strategy of ride the 9 up or ride the 9 down, right? So if this is a 1-minute, you can see short below here in a 1-minute, cover down here in a 1-minute, right? I can't tell you which way to do it. It's all a matter of what your preference is when trading, because everybody has different risk management levels. No, Roku, I'm not really familiar with them. Okay, so that's Apple. Let me take a look and show you guys Facebook now on a daily, just to kind of give you an example on some of these daily ones. And then we'll go intraday. All right, here's another decent looking one on a daily, right? So these red candlesticks down, consolidating to these moving average lines. Moving average lines are resistance. And then you can see right here, kind of these trends, kind of looking at the connecting the peaks and the valleys. Again, look at those trend lines, these intraday or these kind of shorter term ones. Price then fails this green candlestick right here. This is where you could decide to then take a short, right? Or go, go short or, buy. I know I'm not going to get into options right now. Just kind of picture this as just you're shorting a stock. As price starts to fail, now you can see this one, you got a candle close above here as your stop. It's almost basically kind of even with this one. So remember, if you don't take your profits or you wait too long, you might give back a lot of profits or the trade might go against you. But technically, you still don't have a candlestick above here as your stop. So technically, this one, you could still be in it if you waited for a candle close above here. And you'd actually still be profitable. You'd still probably profit. Actually, no, you wouldn't profit on this trade because you went short down here. So you would have lost if you waited on this one. Again, there's loss. But again, if you waited for a close above this, you could still technically be in it. And then it fell back down a little bit. So this is, again, you have to know these other areas of support levels and you start to see these reversal candles. That's when you might consider taking your profits. But if you were just looking at the ride the 9 down, you would have gotten out right here, right? And let's take a look at Netflix and then we'll go intraday. You'll see bear flags and bull flags pretty much on the majority of stocks that you look at. I'm just kind of showing you different versions to look at. You can see Netflix right here, a couple red candles down. Price is moving back to the moving average lines. You can see that red kind of spinning top doji candle. And then when price started to fail that right down over in here, you could have taken a short down in here. You can see it tricked back up a little bit right in here. It may have tricked you out a little bit, but still didn't close above that 9 EMA. And then it fell down, and then here's your close above the 9 EMA where you would have gotten out. Again, you can take profits along the way, learn candlestick patterns, but if you were just taking the short, riding the 9 EMA down, when you get a candle close above it, take your profits, get out. Right? So we have lots of members, guys. So that's just with... as Cher is asking how many members we have. You can come and join us, take our trial, and you'll see in the trade room. So this is, again, daily charts on bear flags, right? So now let's go look intraday, right? I try to keep things simple for you guys because there's a lot to look at in the stock market. So I try to keep, your focus on bull flags, bear flags. They're kind of basically some of the easiest patterns to spot. And then, many times you'll see these patterns within other patterns as well. So you can see now 5-minute chart right here of Bed Bath & Beyond, right? Again, very important to know support and resistance levels. This video is not going to be on support and resistance. We have lots of those videos in our free courses. So I just want to bring your attention to an intraday bear flag. So if you want to day trade or do this is the way to short intraday stocks, and you can do this on any time frame. I'm showing you a 5-minute. I personally like 5-minute charts because it gives me a good intraday setup, gives me a chance to make good trading decisions, and doesn't make me rush to get in or get out. When you use a 1-minute chart, you got to be a lot quicker. I like 5 minutes. I find them to be most reliable intraday because it lets the patterns form. It gives me a time to make the decision, and then I can decide to get out on a 5-minute or take my profits earlier on a 1-minute. That's, again, everybody's trading risk management is different. So you can see here, price is starting to fail right here. It's failing the low of the day intraday, and now it's consolidating back to those moving average lines, right? You can see Price is kind of had that spinning top. Then you had this, it's rejecting right below this 5-minute. These are 5-minute candles, right? So when price starts to fail that green candle here, that's hitting off moving average lines, this is where you would consider taking a short below this green candle. If you're just, again, I'm just showing you 5-minute candles. It's kind of more of the safest way to do it intraday. You also want to look at your entries on a 1 minute. So you want to look kind of side by side with 5-minute and 1 minute for entry. But you can see, this 5-minute candle forms. You would start to look at a 1 minute and see if the setup is good on a 1 minute. And then you would take a short below this green candle, right? Then you can see this blue line is the 9 EMA. You could just wait, and when you started to get a close above that 9 EMA, stop out. This kind of shooting star or gravestone doji candle probably would have shook you out, right? So this may have said, hey, maybe I'll get out here. But you could see, if you shorted right here at 1366, you'd be out at 1356. So again, 10-cent move down, and that gives you quite a bit of time, right? You could also take profits down. Again, candlesticks. You want to look at candlesticks. I'm just showing you that, look at this. You could be in this for a while, and then if you shorted at 1366, let's say, and you covered at 1356, 1366 minus 1356 is a 10-cent profit, right? So if you bought 1,000 shares, you shorted 1,000 shares, and you covered it, you would have made $100, right? So that's shorting, right? You would sell as price starts to fail this bear flag, and then you would cover it when it's time. So you would sell high and then buy low and keep the difference. All right, so let's take a look at a few more. AG. This is a silver stock. You can see here, this one's a little different. This is kind of a pennant-ish pattern, so you can kind of call it a flag or a pennant. It's not perfect, so you can kind of, this is where sometimes like prices, you could look like this, so you can call it a bear flag or you could call it a pennant like this. It's kind of subjective, right? You can see sometimes it's easier just to connect the bases, right? And price starts to come up to those moving average lines, that small little spinning top candle. And then when price fails this candle right up over in here, that green candle, right up in there, that's where you can take your short, right? So you would sell. You can see the moving out price is starting to fail the moving average lines. You can take a short position here, and then you could ride this all the way down until you see a candle close above that 9 EMA right here, right? So you would sell at 1154, and then you would have covered here probably at 1122. 54 minus 22, that's a 32-cent short. That's a great short all the way down, right? So if you only waited to that 9 EMA close, that's a 30-something cent profit. Again, yes, look at candles. There's more you could make profit if you knew candlesticks, but if you were just looking at that 9 EMA all the way down, here's where you would have gotten out, right here. Let's take a look at Target. I'll take a look at, remind me guys at the end of the video to look at some of the stocks. That way I'll stay on track, and then I'll look at some of the other ones for you guys. Target, right? So you can see this had a really bullish move up, then it starts to fail, and you can see these moving average lines starts to cross right here, and then price starts to fail. There's other things to be aware of. These green dots are VWAP, so many a times you'll see price starts to fail, and it goes back down to VWAP, consolidates back to the moving average lines, and then when you see right here, kind of that spinning top candle, volume is also very, very important to keep an eye on. Again, lots of different factors, but we're just going to only show you the patterns. Here's kind of a bear flag. Price fails that spinning top candle, and then you could short this all the way down right over till you see a candle right above that blue line, that 9 EMA, as your stop, right? So right here, you'd short that at 124, and you'd be out right here, let's say around 123.48. So that's, almost a 50-cent move, right? And look, gives you time to short on the way down. I'm showing you some higher cap stocks. This works on any type of stock, obviously, lower cap stocks, low float stocks. Lower float, you're going to probably want to do more like 1 minute time frames. Larger float stocks that don't pump and dump as quickly, you can tend to be in it maybe a little bit more on 5-minute setups. It's tough to get 5-minute setups on low float stocks because they're super volatile. That's when you would pretty much do a 1 minute time frame. All right, let's look at a few more here. BE. This is an energy stock, has some volatility to it. And you'll see over in here, you can see the candlesticks get a little bit crazier on this. You can see lots of wicks and shadows. Price starts failing these moving average lines. Again, you'll see many times price will fall. It'll bounce off moving average lines, right? Consolidate back up to the other moving average lines. And then you can see here, kind of that red spinning top candle. As price starts to fail, you could have waited below the body of here, or if you wanted to wait down into here, again, it's kind of subjective, right? But you could use a candle close above here as your stop, whether you do, above this one or above this one. But kind of a short below here, once you take the short below, let's say 873, you'd be out down over here at 864, so 9 or 10 cent short. If you looked again, other areas looking at reversal candles, you could have made more. But here's, 5-minute setup. You're in this 5, 10, 15, 20, 25, 30, 40, 50. That's about an hour, right? So if you're shorting on a 5-minute, setup. So if you're at work, I like to try to show you guys this to kind of make day trading kind of more relatable or easier, because most people, let's call it like it is. Most people can't, they work a job, right? So trying to trade, day trade or short stocks when you're at work on a 1-minute time frame could make your head spin, right? It could be very, very, it's volatile, right? And it's hard to do. But if you can slow day trading down by just using a 5-minute setup, get a nice setup. You might only get one of them a day, and we might get one in the morning and then maybe one in the afternoon. That's why I do stuff like this. I kind of have my, I have this kind of up on my screen, right? So I'll kind of just put stocks up like this, and I'll just look and I'll see, okay, where's my 5-minute bull flag? All right, so here's a bull flag, or kind of a, pennant or a flag, right? So there's a flag breakout to the upside, right? You can see, kind of another flag pull up right over here. So depending on the day, right? If it's a bullish day, you might be trading, obviously, bull flags. If it's a bearish day, you might be looking at, then you'd look to bear flags, right? So move up, consolidate back on a 5-minute, break out, right? If you want to look at, intraday, so on a bullish day, many times silver and gold are bearish. So you can start to see right over here. There you go, intraday. So as energy was going up and stocks were going up at this period of time, you can see a bearish play right over here. Price starts to fail, right? So again, using these 5-minute setups, I can just wait and let the patterns form. Take time. This took till 11 o'clock for that bear flag. This bull flag consolidated at, to 125. Sometimes you get the roller coaster, right? So for me, like if I'm looking for bull flags and bear flags, I might stay out of this, right? Or I'll look at other stocks and see what's happening and see what's going on that day. More in the morning, you can see right here, this kind of had, CVIT kind of went up, came back, consolidated back down, and there's kind of like your pennant or your flag, right? So one kind of here, There's one right around 10:45. If you're waiting for 5-minute setup, sometimes it takes a while, like not, hour, hour and a half. Let the pattern form, get a good entry, and there it goes. It breaks out. Right here, kind of a move up. Right here around 10:35, breaks out. Over here, 10:55, breaks down. You can see, let these patterns form, right? Bed Bath & Beyond, I think that was one right over in here. This is just a different day to look at. Right here. So you can see this bear flag formed, and you would have taken it right over here on 10:30, 10:40, right? So let the patterns form intraday in a 5-minute, and then it gives you time, right? So this is a way to kind of like, gives you time on a 5-minute chart is what I want to say to you guys. So this is what I do, is I just kind of have a 5-minute chart set up. I have my support and resistance mapped out. Again, very important to know, pre-market highs, daily, hourly support resistance levels, and then just look at these charts. And if it's a bullish day, you might be looking at bull flags. If it's a bearish day, then you'd look for this: price to fall, consolidate back to the moving average lines, take a short, and then use that 9 EMA. When price gets above that 9 EMA, get out, right? Take a short right over in here. When price gets above that 9 EMA, get out. And you can see the time is a lot of time on these. Now, these are some higher cap stocks. Again, if you're doing lower float, you would just change your time frame, look at a 1 minute, and chances are you're going to be out probably a lot quicker, or the candles are going to be a lot more volatile. Well, bearish bull, I'm not telling you to day trade when you're at your job. I'm saying that, that's, if you just listen to what I said it's very hard to day trade in your job on a 1-minute chart. I wasn't telling you to do it on your job, but if you are trading, you can do a 5-minute chart setup looking at what I'm showing you guys here on higher cap stocks. If you were listening earlier, I was saying obviously low float's going to be a lot more volatile. So taking shorts on your job, not going to be easy to do. So sorry if that made you upset. I don't know if you heard the earlier part, but I was not suggesting whatsoever to day trade in a 1 minute at your job. That's, again, up to what you're able to do on your job. So I don't know if you heard me or what, but make sure listen back to the video. I wasn't suggesting doing that. I'm showing this entire video, if you've been paying attention, is about slowing day trading down. So it's not like a day trade. So using a 5-minute setup, it's not like specifically like day trading where you're getting in and out on a 1-minute chart. It's kind of like giving you it's not swing trading, it's not day trading. It's you're still basically day trading, right? You're making a day trade, but it's not making it as quick, right? 1-minute charts, you got to be like really on your game. But, if you're doing some higher float stocks, you'll see on this right here, I'm looking at highly liquid, higher float stocks. So you'll see, these stocks right here are very high float stocks. That's my style. I'm just showing you something that I like. You'll see right here on my scan, I really like, I put like 100 million float, right? Because there's less pumping, less dumping. So I really like stocks between $10 to $15. But if you don't have that same, account size that I do, you have to have money in your account to be able to trade those ones. Then look for stocks between $1 to $10. Have a float of, let's say, minimum of 100 million. So it slows it down, right? Those are higher float, less pumping, less dumping, which also basically means, less risk, but also less reward, So if you're trading low floats or shorting low float stocks, it's going to be more pumping, more dumping, a lot more volatile. So there's more risk, more reward. I personally like to slow things down. I like a 5-minute chart setup. And that's why I personally like a minimum of 100 million float. So I'll scalp my 5 or 10 or 15 cents down, right? Gives me time. And then I can just kind of just look at my charts and just let the patterns form. If these were low float stocks, that's going to be a lot different, right? So if you looked at, let's take a look and see if there's a few that we could have looked at instead. Let's look at, so I'm going to keep this 5-minute setup. I haven't even looked at any of these yet. Let's look at some of the ones that just skyrocketed on Friday, and then let's take a look at the 5-minute setups, right? So let's look at CPA. So CPA, if you look at a 5-minute setup here, super vol, if you didn't catch it in the beginning here, then you're caught up in all these wicks, right? And these candles get a little bit, they're bigger candles, right? So now you can see the risk is a lot more on a 5-minute. You're usually taking stocks that are away from moving average lines a little bit more. They're bigger candlesticks. Some people like this. Not my style, right? But you're dealing with bigger candlesticks, so higher risk, higher reward. I like more of the, I like to slow it down, right? Let's take a look at some of these. And that's right here. So that's a very low float stock. Perfect example. This is super low float. And so this is what you're dealing with. So this is where you would have to then go to like a 1-minute stop time frame, slow it down, and then go in and start to see, look for the bull flags, the bear flags. You can see some consolidation. This was a bull kind of pennant right in here, kind of moved in, consolidated, took off, right? And then you can see, the wicks up in here. So let's just take a look at some bull flags, bear flags here. You can see on a 1-minute chart, kind of this consolidation back, kind of that pennant. Then this thing breaks out. So if you got in and let's say called that a bull pennant or a flag and got in at the break right of this 172, you could technically be out when it closed right up here below that 9 EMA at 225. That's a nice move. So if you're only using that 9-minute strategy on the way up, you'd be out here. If you got a good small little entry, great profit on the way up. Now, if you're looking on the way down or you're shorting it, now you're not going to be able to short a stock like CPA on TD. That's when you need a broker like Interactive Brokers, Speed Trader, or Centerpoint. This is where you would look at this. Price starts failing. These moving average lines start going and heading downwards. And then you can see right in here, this is where I want to show you guys, right? You got to be quicker on these 1 minutes, especially these low floats, because you can see it starts to fail at 199. If you waited for a candle close below your 9 EMA, now look at this, you took a loss. But actually, if you took, right here, if you shorted at 199 down in here, you could actually took a quick, one to, 2-3 minutes, you could have made 10 cents. But if you waited to the 9 EMA close, many times you'll lose on these low float stocks if you're just using that 9 EMA close. So that's, again, you got to learn other, you have to know other things like support and resistance throughout the day, highs, lows, all that good stuff. But, here's another one. Price kind of came back here again, consolidated back right here. And then, you could have took a short right over in here as it's closed. Oh, that's a 1-minute candle right here. So yeah, right as it starts to fail right here. So you could have shorted at 198 and then you would have been out here at 195. So you see how you got to be a lot quicker on those low floaters. So typically when you're shorting these down, you're looking at 1-minute candle reversals, and you can see there's a reversal at the low kind of the day right over in here. So that's where you would consider taking your profit. So this is where, if you have the time, again, some people can trade on their job and they have the freedom, but if you're distracted and you don't have the time, this 1-minute chart, you got to be super quick to short, right? So remember, you're shorting as it's kind of failing this the previous candle right in here, or, kind of right in here, down in this one right over here. And then you would, definitely get out or decide if you're going to get out. Again, the strategy I'm showing you, when candle closes above that 9 EMA, you would be out. But along the way, again, very important to learn candle patterns and all of that. So don't just say, oh, okay, tomorrow you're going to, come Monday, oh, cool, I see a bear flag, let me short it. You got to know how to trade more in general, obviously, to be able to get to that point. All right, guys, how's this help you guys so far? I see somebody didn't like what I had said. Any of you guys have questions? I can take a look. I see lots of comments here on YouTube, so let me see. There's Derm. Let me take a look at Derm if you mean, if I don't know if that's an intraday one or if that's a longer time frame. All right, so this is, let me look at the daily. Roku, when you're saying with Derm, let me see. Are you talking about a short for Derm, or was that a different one? Derm is, wow, that one's nasty looking shooting star, or shooting star candle way above here. So there's other, again, things like reversals. Not saying to do this by any means, but, you know, looking at reversals when you see candles like way out here near resistance, you know, this is where you could look and see, all right, kind of a doji candle. If price starts to fail this intraday come Monday, this is where you might decide to take a short below this candle using a candle close above that as your stop, and then look at support levels below for areas to cover. That's another way, you know, to short. This is not bear flags, but let me see if we can find any bear flags. Decent ones on the chart. You know, it's kind of like this. This is where you start to see stuff the more you look at patterns. You kind of just learn to connect things so you can kind of see like the consolidation. Again, not everything's going to be perfect. You know, you can kind of connect these and say, okay, price is failing, moving back down. You know, this is where you'd start to look, okay, maybe I'd kind of short as price starts to fail in here. Again, hindsight's 2020, right? Well, let's take a look and see if there's any other ones. This is a really choppy looking chart. What are my moving average lines? So right here, the blue line is the 9 EMA. The red line's the 20 EMA. The pink line is the 50 SMA. And the black line's the 200 SMA. EMA stands for exponential moving average. SMA stands for simple moving average. This green line is the 13 EMA. You know, you don't need the 13 if you have the 9 and the 20. Some people like the 13 by itself. So basically, if you use the 9 and the 20, you don't need the 13. I just kind of have it on there. So if you do the 13, you don't need the 9 or the 20. Did I say that? My brain. If you do the 9 and the 20, you don't need the 13. If you do the 13, you don't need the 9 or the 20. So again, I just wanted to show you just, there's so many different strategies. I want to keep it simple for you. Just kind of use that 9 or the 13. If you don't like the 9 and the 20, do the same thing I'm showing you in this video on the 13, right? You know, take the short on the way down on the 13, use a candle close above that 13 as you're ready to get out. You're welcome. All right, guys, so let me give you guys another minute or so if you have more questions. Let me see if there was another, just to kind of like, I like to do repetition because repetition is the key on things. Let's maybe pull up a couple of other ones. Again, this is with shares of stocks. There's options as well. We do teach how to trade options in our group. Lots of option teaching in our courses. You can see price again failing these moving average lines, consolidating back. As it starts to fail right here, that green candle, you can take a short position down and then cover down here when price closes above that 9 EMA. So again, I try to say it over and over again. I try to simplify it to give you really that visual. Bull flags, bear flags, really popular patterns to keep an eye on. Now you'll see bull flags many a times will form within cup and handles. Bear flags will many a times form in inverted cup and handles. So if you kind of like, perfect example, right here, kind of picture this as an upside down cup, right? And then price is moving back. So that's an inverted cup and handle, right? So it's kind of the upside down version. And these areas above become resistance levels. So if price can't get above those moving average, you know, if it breaks out of those moving average lines, then you start to look at these areas above as resistance levels. And that's why it's important to know candlesticks. Let me just see what you guys are asking. SRNE. Are you looking intraday or are you looking on the daily chart, Roku? So this is a gapper up. You can see these ones are just super volatile. These are ones like if you're doing bear flags or you're shorting something on this, you would go intraday. And, you know, you'll see many times with these stocks, like 5 minutes might be difficult. You might have to go on a 1 minute. So this is a 5 minute. This is just kind of trading super sideways. Let's take a look at a 1 minute if there would have been a setup here on a short 1 minute. Possible. You can see it's failing, hitting these moving average lines. I like a little bit cleaner. So again, me personally, I like 5 minute setups. Yes, can you use bull flags? Bull flags to swing trade? Absolutely. Same thing with bear flags. You would just basically do options. Or if you have a huge account and you can short on the way down, just, you know, be aware it's a little bit riskier doing that. But yeah, to swing trade, going back to kind of what I was saying in the beginning, go to a stock, let's say like Apple. Here's a perfect example. You find a bull flag, look at price above these moving average. See how price is just riding those moving average lines? You could just pretend just that blue line. You could ride that blue line. So if you got a price, you know, entry above, you know, that blue 9 EMA, just ride it. And then when prices closes below the 9 EMA, get out, right? Let price kind of consolidate, fall back down, look, gets back above the moving average lines again, right in here. Then you could decide again, boom, breaks out, and then rides at 9 EMA. It just gets a bit riskier, you know, as it's getting out. Do you want to give back, you know, lots of these profits? You can see if you got in down here around 270 and it's way out here at all-time highs over $300, do you want to, you know, do you want to wait for a candle close below that as your stop and give back a lot more profits? Me personally, when it starts to break out, you know, as it's getting way out here, I would take my profits. I wouldn't wait for it to close below that 9 EMA. I'm not sure what you mean by that, Roku. What's clean chart? What do you mean by that, Roku? So that's riding it on the way up, swing trading on the way up. You could do it again on the way down too, right? Look at it downward right here. So you can see price is failing and you can see this bear flag right in here. So as it's failing down here, look at this. You could just ride it all the way down here and then you would have gotten out right in here, right? Now, other things to be aware of are trend lines and stuff. So you can connect the trend lines and start to see, you know, when price breaks a trend line as well. That's a whole other thing. I'm just, again, using that 9 EMA right here. Price is failing. You can just swing trade this on the way down, and then you can be out right over in here. All right. So, you know, but if you don't want to get shook out in here, you know, some people might say, I'll use that 20 EMA as a guide, and you can see right in here, you know, price is failing. They might not have gotten tricked out down here. They would have stayed in all the way down over here, right? So if you get a good entry, you know, if you want to extend it a little bit longer, maybe use a 20 or look at, you know, trend lines. So that's a whole other thing, is connecting those peaks and those valleys using trend lines. Again, one of our favorite tools to use is Trend Spider. So if you go over to our website, let me just take a look and see, where's our website? Right up here, bullishbears.com. If you look under tools, under the tools section, you'll see Trend Spider. Trend Spider is an awesome tool right here. Really great for swing trading, does trend lines automatically for you. So you can take a look at our review and stuff over in here. Again, we absolutely love using Trend Spider. It does these trend lines on all time frames for you. It's really good for 1 minute and 5 minute too. Just sometimes you have to refresh it a little bit quicker. So when you're day trading, I still think, you know, you got to be a little bit more careful with that tool. Sometimes you have to refresh it. I like things live, so it's fantastic for swing trading. But you know, especially if you're new, a tool like Trend Spider helping you to learn those trend lines. Very, very great to use to help you get started. Again, if you're not a member of our community yet, we're the Bullish Bears. We're a full-scale trading company. We teach things like day trading. We teach low float, high float, small cap stocks, options, day trading options, credit spreads, all of that stuff. So I'm just, again, showed you shorting bear flags today. We teach a whole bunch of different strategies. We have lots of courses right up here to help you get started. What would you say is Tesla on the bull flag? Let me see. TSLA. So, yeah, good eye, right? So maybe a bull flag. We'll have to watch and see if it can kind of pull back to that 9 EMA. So it's a bit overextended. It's bouncing off those dots, which is the 5 SMA. So this one might have a mind of its own. We'll have to see. But right here was your perfect bull flag right there. So perfect looking bull flag right in there. Price goes up. As it broke above this candle at 420, you could have gotten in, and now at $500 at all-time highs, I would consider taking my profits, right? This is where you sometimes don't want to get too greedy because you don't know. This thing could just, who knows, it could dump and fall back down and you get back a lot of profit. So we'll have to see if this flags, kind of look like this and seeing here. It may bounce off that 5 EMA and continue. It might not pull back to the 9 EMA. Again, the moving average lines are more of just a guide. All right, guys. So again, come and join us if you're not a member yet. We teach all of this stuff in our community. I wanted to try to keep this one as simply as possible of looking at bear flags, bull flags, and bear flags. Really, really popular patterns. Looking at, kind of use that ride the 9 up or ride the 9 down strategy. Again, don't just trade to trade. I'm just showing you a strategy to kind of keep your risk minimized. That 9 EMA might trick you out sometimes, but it'll also keep your losses smaller too. So if a trade goes against you and you use a candle close above or below the 9, depending whether you're going short or long, sometimes if you just wait too long, it might trick you out a little bit, but it should keep your losses a lot smaller for you. And we're all about teaching proper risk management. We like to kind of, again, that's the whole thing, right? Keep your losses small, let your winners run, or let your runners run, and keep your losses small. All right, Roku, glad that you liked this video. I'm glad it helped you guys, and I will see you guys all later. Enjoy.